Welcome in everybody. So today I want to talk about a specific stock that, well, most dividend investors are probably really going to like, but I technically think that this company has a huge opportunity ahead of itself, especially after all the investments it's been making. Now, this has been a boring company, but to me, I find this one pretty interesting. So let's get into the recent acquisitions that this company has made. So just scrolling through, this company's made over a dozen transactions, picking up a lot of companies, but the largest company that it recently acquired is a company named Splunk. So the company we're talking about is going to be Cisco Systems, ticker symbol CSCO, and most of you know that I'm kind of bullish on this company, and I do think earnings are going to trough here in 2024, which makes this one an interesting setup for 2025. When's the best time to accumulate this stock? Well, obviously when earnings are down, and that's exactly what's taking place with Cisco. Now, recent acquisitions, they all have something in common here. They're all pretty much cloud companies and cybersecurity companies, which we all know is definitely in the headlines. When we talk about companies and stocks that have been outperforming, it's been your chip makers, it's been anybody that has AI in their name, and it also has been the cybersecurity companies. And Cisco has been acquiring these cybersecurity companies for an extended period of time and is now starting to really get aggressive on acquiring these companies and implementing them into their business, along with some AI companies that have large language models. So to me, Cisco Systems is beyond just what we think they are, and that is a value company that pays a dividend and is a legacy, outdated hardware company. I think Cisco is going to be a very interesting company to own, not necessarily this year, but going to 25, 26 and beyond is pretty interesting, especially with how much money they're investing in cloud and cybersecurity and kind of getting overlooked. When we look at the valuation of Cisco Systems, trading around an 18 PE ratio and a forward PE ratio probably sitting closer to 15 or 16 times. On here it says it's right around 12 to 13, but with their recent earnings report and guiding down for the year, I definitely think this is a little, looks a little too cheap. So I'm thinking it's probably closer to, from a gap perspective, probably closer to 18 times forward earnings. Now, beyond the acquisitions that they've been aggressively making over the last year, we can see that revenue has been growing and had a nice pop in 2023 with a decline coming in 2024. They grew revenue around 10.5%, but on their recent earnings report, revenue was down right around 6%, earning GAAP EPS of 65 cents a share, which is also down 3% on the year, and a non-GAAP EPS of 87 cents, down 1%. They are starting to get some revenue growth in cybersecurity, and with the acquisition of Splunk, that should be a substantial aspect of their business model going forward with recent acquisitions that they've done in 2023 as well. It's pretty clear what direction Cisco wants to go. It definitely wants to go more on that services aspect, that SaaS type business. And we're starting to see that the hardware aspect of their business is starting to fall off here when we go through their quarterly report. But what I do like about their hardware business is if AI is really going to be implemented, then there should be a hardware boom coming in the very near future. And Cisco is positioned both from a services standpoint and a hardware standpoint, which to me makes this company very interesting and undervalued and underappreciated, especially when we compare it to a lot of the cybersecurity companies that are getting extreme multiple expansion here. Now, through this video, I'm going to work through Cisco's valuation, kind of give you guys what I'm seeing, what I think they're capable of doing, and we're going to go from there. So even though revenues are coming down, Cisco is showing that they are getting some margin growth here, and they are going to be getting more aggressive on closing the Splunk deal faster, which will be implemented into their business model here very soon. Now, Cisco has been extremely aggressive as we see acquiring companies, building out a cybersecurity cloud base, and getting that services revenue up. And that's where we're going to pretty much see margin expansion as well. But the other thing we like about Cisco is they have a tremendous amount of cash on the balance sheet, sitting at $25.7 billion and very little debt. They can cover all their debt with the cash on the balance sheet. They recently raised their dividend, and for the last 12 years, Cisco has been paying a dividend and raising a dividend. So very fiscally responsible company, and kind of getting overlooked when we think about the AI movement, cybersecurity. This company is positioned extremely well in my personal opinion. Now the question becomes, can they execute and can they regain top line revenue growth? As I do think earnings are going to trough in 2024. I believe 2025 we can see a reacceleration of Cisco's earnings with the acquisition of Splunk being implemented into their business, along with the other 11 businesses that they've acquired that are starting to kind of become part of their business model and become more efficient to what they're trying to do. The other company that they acquired recently is Valiant. So these are two companies that they recently acquired, one in September, obviously being Splunk, and the other one being Valiant, which was acquired in December. So by the end of this year, 2024, these two businesses should be implemented into Cisco's business and really start becoming impactful to what I believe top line revenue growth. We should start seeing some acceleration back on Cisco. Now, Valiant is a cloud name, privately held company that was bought up by Cisco, and you can just see kind of the type of clientele that this company had. Everything from Alibaba to Google, Overstock, Datadog, some names that we're pretty familiar with here. So this is becoming a pretty interesting, in my opinion, that Cisco is getting aggressive on these acquisitions, kind of getting overlooked, being fairly discounted. Now, I don't think Cisco is a screaming deal by any means, especially if we think revenue is going to decelerate. But I believe that revenue is starting to find a bottom here, and we're going to start seeing things turn around over the next 3 to 4 years for Cisco, especially if these acquisitions start paying dividends, which now comes to what do I project Cisco to do over the next few years. So when we look at their quarterly report, a few things I want to talk through. So a few things I want to talk through on Cisco's earnings here, and I want to look at the 6 months ending and kind of project out what I think 2024 could look like. Now, I believe they're projecting out for 52 billion in revenue, but in the 6 months ending, we can see that they're doing 20 billion in products and roughly 7 billion in services, making up a combined revenue of $27.5 billion for the 6 months ending, which means they're probably going to do right around $54 billion by the end of this year if they keep the pace that they're keeping here and kind of remain flat on revenue. Now they're guiding down to 52 billion. So we're going to use 52 billion as a jumping off point, but I think they're trying to set the bar low so they can exceed expectations just like every other company does. But now what I want to start talking about is if this is a company that can do anywhere, call it between 50 to 60 billion in revenue, kind of currently doing what they're doing, we'll meet in the middle and say right around $55 billion of revenue. With the acquisition of Splunk, Splunk is a company that is doing over $4 billion of revenue and is actually not demanding the multiple that a lot of these other high flyers are getting. Splunk is actually a pretty interesting company when we look at it from a valuation standpoint, especially when it was $80 a share. This was a company I was personally looking at, and the fact that Cisco bought them up, I basically want to own Splunk, and I'm trying to look at this as you're getting Splunk for free by buying Cisco right now. Cisco's always traded kind of where the multiple has been at. Cisco's been consistently trading between $40 to $50 for most of its for the last 5 years. Now acquire Splunk, still trading between that $40 to $50 range. And we're looking at a company that is growing revenue pretty strong here, going from $2.2 billion up to nearly $4 billion, doubling its revenue in just a few short years. Now, I think this growth is going to slow, but what I want to say is this is going to add right around $4 to $5 billion of top line revenue for Cisco by the year of 2025, in my opinion. They closed the deal this year, and by 2025, I think the efficiencies are going to start ticking up for Cisco. Which means when I look at my valuations on Cisco, I think by 2025, they can be doing closer to 60 billion in revenue. So I'm going to err on some caution here and say that this spike is going to get them to do right around $57 billion of revenue by 2025, 61, and then they're going to obviously have slower growth. Just erring on some caution here. Now, the other thing I want to talk through is the multiple that Cisco is getting. A lot of these cybersecurity companies are getting extremely high multiples. And with Cisco kind of looking like a legacy product company, I think it's mispriced here if all acquisitions go well and they can make services a greater part of their revenue. I think you have to put a higher multiple on the stock. Now, I'm going to keep the multiple where it is just to kind of show you guys where we're at this point in time. But if Cisco were to kind of keep doing what it's doing, it's almost in a buy range, in my opinion, between $35 to right around $43 a share. And I think anything in the 30s is pretty much a steal, because I do think that services are going to be a bigger part of the conversation going forward when we talk about Cisco Systems. Now, if we compare Cisco Systems to their peers, the forward multiple of EV to EBITDA is sitting at 9.44, while industry or their peers are sitting at nearly 16. So trading at a substantial discount on a multiple of enterprise value to EBITDA. And so what I want to do is just give it a market multiple here, just to kind of show you guys, not even putting the multiple on cybersecurity being a larger part of what they do, but just giving them a market multiple on that revenue growth that could be coming in the very near future. So I'm just going to bump it up to right around 16 times, which now gives us basically a buy target right now. And so I think Cisco's pretty darn close to a buy here, and with a future value sitting right around anywhere between $85 to $100 a share, I would say by 2032. With these acquisitions going in and what I'm projecting out here. Now, if these acquisitions don't go in, then I think, Cisco's still an interesting stock, a decent value stock. It's been paying a dividend for an extended period of time, growing that dividend. But what we want to see, and what the big problem is with a lot of dividend investors, is they're looking at just the dividend. In order to have true appreciation, you have to have earnings growth along with dividend. You have to have earnings growth along with that dividend. So while dividends are nice, if the company is not growing earnings, you're going to see more dividend cuts coming in the very near future. Now, with a company like Cisco that had a very clean balance sheet, pretty strong free cash flow, and we can see that the products are suffering because a big part of it is telecommunications are not investing as much in infrastructure as they used to, and that's actually a big part of what Cisco Systems does. But with those acquisitions that they're starting to get into their company and building out the cloud and cybersecurity aspect, I'm expecting services to grow, which will then grow margins and can grow multiples. And this could be a very solid compounder at the right price. And that price to me is anywhere between $45 and below. Basically, I'd be looking anywhere between $30 to $45. If that stock falls anywhere in that price range, I really think you have a very, very solid company at a reasonable valuation that could be a very strong compounder. So guys, that was my dive into Cisco Systems. Really like some of the acquisitions. I think they overpaid for Splunk a little bit, but I'm kind of curious to see if they're overpaying for the management side of Splunk. And are they going to keep laying people off here? Because they have started making layoffs, and I don't think that's the end of that. As more companies start getting implemented into their business, I think we're going to see more and more layoffs, them kind of trimming the fat and getting more efficient, which will then grow EPS. As always, guys, appreciate your time, and we will see you in the next one.